Hi everybody, it's Ben Thompson here from IncoTerms.com. Welcome to the Import-Export podcast. Today we're talking about international marine insurance. We're joined by Steve Mahaffey from Coverfreight. Steve, welcome to the podcast.
Thank you, Ben.
So today Steve and I want to discuss how marine insurance works, what shippers actually need to understand about marine insurance, and how you can ensure that you have the right cover for what you need in your business. So Steve, before we start, tell me a bit about yourself and the experience you've had in this industry.
Okay, Ben. Well, this is my 25th year in marine insurance. I started off as a marine underwriter at a company called Associated Marine Insurers, a very well-known company here in Australia. I was there for 15 years as an underwriter and various other jobs, working in claims to development to even management, quite a lot of management. From there, I left the marine company and started my own business, and I have been now a marine insurance broker for the last 10 years.
So you should know a thing or two about marine insurance.
I hope so. Also, during that time, I actually did 12 years of study. I ended up obtaining a fellowship in insurance, which is the highest level you can achieve within our industry. And I also went off to the Australian Maritime College, where I got a graduate diploma in ports and logistics.
Sounds great. So today I want to give our listeners some information just around basic terms of what marine insurance is and how it works. So we'll give them some tips and let them know the best way they can ensure they've got the right cover for their business. So to begin with, I guess, can you explain why it is important that as a shipper, I must have my goods covered by marine insurance?
All right. Probably the first and easiest example to explain is a general average incident where even though your goods mightn't be damaged on a vessel, if that vessel does get into any peril, you have to pay the shipper to get your goods released. So it's quite an interesting concept, which I'm sure you'll probably ask me about later on, and I'll go into a little bit more depth, but that's certainly one reason, besides your usual breaking, scratching, denting, chipping, rubbing, bruising. There's plenty of thefts. We have a lot of non-deliveries, containers not turning up, or packages going astray via the various carriers that take it. And then we also have our major losses of your sinking, your stranding, ships getting into trouble. We also have a lot of road rollovers and major losses that occur via that way.
Yeah, it's not so much a straightforward process, is it? I mean, it's easy for some people to assume that the containers just get delivered, they get put on the boats, they arrive at your door, but in between there's so much risk involved, and it's imperative that they insure that cargo, because it'd be nothing worse to a business that, as you say, a container gets lost or dropped or completely destroyed. That's a lot of money.
That's for sure, yeah. And I think the actual owner of the goods, they do employ freight forwarders to move their freight around, but I think a lot of the risk itself, the freight forwarder certainly doesn't convey that to the owner of the goods. Examples like getting subcontracted to a trucking firm, for instance, and then that trucking firm might subcontract that cargo out to another firm, and then it gets subcontracted out again, and finally arrives at your front door in a truck that's just got white panels on. So a lot of people are happy just that their goods have arrived, but I'm pretty sure they don't really understand the logistics behind all of that. Yeah,
absolutely. And when it comes to who should cover the marine insurance aspect and where the risk changes over, I guess that relies a lot upon the IncoTerms that the buyer and seller agree to. So just say I'm buying a 20-foot container from my supplier and I buy an FOB terms. What's the best way that I can arrange my cover there? Should I consider, obviously depending on my volume, but what's the difference between a once-off cover or an annual cover, and the benefits and pros and cons with that?
For sure. Well, marine insurance is all warehouse-to-warehouse coverage. So the policy begins once the goods are first picked up for the purpose of loading, and the policy ends once those goods are at their final destination. But with marine insurance, you need ownership in the goods to actually claim on it. Now, this is an interesting concept for people to get their head around. Now, the ownership is determined by the IncoTerm. So in your instance where you said you're importing a container on an FOB basis, the changeover or when you actually own the goods will be at the exporting port overseas, wherever that may be overseas. So you could say that first leg, because every bit of cargo has to get to the port, that would be the ownership of the seller to you. Now, once you buy it FOB, once it passes the ship's rails and is on the ship, it becomes the ownership where you can now claim on it. So, and it, like I said, it will cover it right to the final destination. So if it arrives here in Australia, for instance, and then it needs to be trucked to the rail and then railed up to top of North Queensland, that'd all be in the one marine insurance coverage that you would take out.
Yeah. So it's important to look into it and get it right and actually understand what part of the journey it actually covers, because...
Very much so, yeah. Here at Coverfreight, we talk to people about their IncoTerms all the time.
Yep.
So we do have inquiries where people will call up and want to insure it, and we'll say, well, what's your term of purchase or term of sale that they're selling it to them? And they might tell us DDP, and we will tell them that they actually don't own it until it gets to their warehouse itself. Yep. So there's no point buying marine insurance.
Absolutely. So you must firstly understand the Incoterm properly, and then contact your marine insurance provider and get a proper cover.
Yeah, a lot of people confuse payment with ownership of goods in international trade. I would say that's one of the common areas where we see a little bit of a pitfall there, that people have a lack of understanding. They think, I've paid for this, and so it becomes mine. Unfortunately, with international trade, it's all determined by their Incoterm. Some people may have accounts, and they might not even pay for it. So on the reverse side, they might not have paid for it. They have an account for 45 days with their supplier, and the goods have already arrived, but their ownership might have been at that FOB point, and they need to insure it from then on.
Yeah, absolutely. And what types of are the main types of marine insurance cover in simple terms? Does it depend on the cargo, depend on destination? What are the factors that the shippers should consider? Yeah,
well, cargo insurance is one of the oldest insurances around. We've always had three types of cover you can purchase under your cargo insurance.
Yep.
Really, the costing now, cargo insurance, the one thing about cargo insurance is that it's cheap. There's a lot of competition out there. There's a lot of competition internationally, let alone here in Australia. There's, I would know of at least a dozen underwriters who would offer cargo insurance.
Yep.
So with that, due to that competitive nature, it's fairly cheap, and we always recommend people buy the Coverfreight or the top cover. Yep. I think you'll find that the pricing in between, it's quite pointless to buy what we call an Institute Cargo Clauses C, and when it might be only $50 or $100 to actually then get an Institute Cargo Clauses A, that will cover a lot more risk to your goods.
So what are the main differences split up between cover A, cover B and cover C?
Yep, all right. Well, we'll start at the bottom with cover C.
Yep.
Cover C generally is a major peril cover, or what we call major peril in marine insurance. And major perils are things like sinking, stranding. A general average would be a major peril. Once it gets on the land, a fire or a flood or a collision or overturning of the vehicle, we call them your major perils. Cover B, if you buy your cover B, so the one in between, we'll add you a few more C risks. We'll add a washing overboard risk to your cover, and we'll also offer some sort of theft element in there as well if you want to purchase an extra theft element. But where you cover A will cover your full all risks of goods, or full all risks of, we call it all risks, and in layman's term you could use that word comprehensive. So it's the most comprehensive cover you can get. So we'll cover that scratching, denting, chipping, bruising, rubbing, tearing in the container. We'll also cover any theft, non-delivery, pilferage, if somebody just steals something out of the container and then seals it back up, and then all your other major perils that are covered under Cargo C.
From your experience, what are the top few major reasons for an insurance claim, the most popular insurance claims?
Accidental damage, I would say, would be if you want to use the word popular, would be the most claimed.
Probably not the right word, but anyway.
No, they're certainly the most. So accidental damage is your typical breakage.
Yeah.
So where something isn't stowed correctly in the container, comes loose and it breaks. Or it could be on a flat rack and it gets bumped by another bit of cargo and there's accidental damage to it. We certainly have a good swathe of theft claims or non-delivery.
Yep.
It's hard to say which one, but marine insurance will pay up for either one. But and then lately, I must say, in the last couple of years, we've had our few general averages come along our shores, and which is always an exciting time in our marine insurance land.
Gets you, it'd be a big job to put through all those claims, no doubt. So,
well, we certainly talk about these major perils and certainly the general average for years and years. So, we do like it when they come along. So,
okay. And what is the difference between cargo and transit?
All right. Well, cargo is a term in insurance that's used to denote any type of goods, produce, livestock. Pretty much anything that you can think of that is transported generally for what we call a commercial gain.
Okay.
So that's what we would call cargo. Would certainly we at here at Coverfreight we insure cargo not for commercial gain, so of personal nature. So a household move, for instance, or I'm importing a car. We certainly do a lot of those, but I would say 98% of what we do is for that commercial gain. So people in trade, buying and selling.
Yeah.
Yeah.
And when should I consider doing a once-off marine insurance cover for my shipment or an annual cover? What's the advantages of either way?
Yep. Well, like I was saying, that the cost of marine insurance has come down substantially. So there has been a shift in annual and single transit policies, a shift in the way that previously it would cost you the same to buy an annual policy, say if you had 3 single transit policies a year.
Okay.
Now that the price has come down, you could probably do probably a half a dozen single transits and all of that premium together would denote or would be the same for an annual policy. Okay. So, but there's no doubt about it. If you're an importer or exporter and you're doing more than, 4 to 8 shipments a year, certainly look at an annual policy because where we sit with marine insurance, a lot of the charges is around our administration. So like I said, marine insurance has been around a long time, but it's been administered very poorly and very costly for the client.
Yeah. Okay, and run me through the process of what actually happens if I have a problem with my shipment. I've ordered my 20-foot container. It's turned up to my premises and the cargo has been damaged quite badly. I mean, what does that process look like? What's the first thing I do? How do I claim on that? Yeah,
well, the first thing you do is call us here at Coverfreight and we appoint a marine assessor who is on your side. I know that a lot of people think assessors aren't on your side, but really the assessor's job is to get all the paperwork, to tell you what to do, to tell you the next steps, to tell you if you can reorder straight away or if you should wait. So he's there for that advice on the spot and to run the claim right from the beginning and right through to his final recommendations where we pay the claim. Yeah,
I guess it's important to remember, like you said, everybody's working together. You've got to jump through the hoops. You've got to fill out the right paperwork. And so typically, how long would that process take from lodging the claim to actually receiving a payment out?
Typically, with the industry itself, would probably be around 3 weeks. We have modernised it quite a lot here at Coverfreight, and we certainly have what you call settling authority here, so we could, if we believe and can assess the loss. Certainly, any small losses we don't even bother assessing. We just send out the cheque and away we go. So we really don't want too many hassles with the insurance. On the claiming side, we want to make it very easy for the client to get on with their business and put in that reorder and get their stuff. So, and a lot of policies will even have additional benefits in the event of claims. So things like expediting expenses would be included in every single one of our policies. So if there was something extremely important that was damaged and it came by sea and you need it pretty soon, well, the policy will pay for air freight to bring the stuff out. Okay. So there are a lot of benefits around that claiming situation to try and get you into that same position you were prior to the loss.
So it's important to talk to your insurance broker and give them a really deep understanding of your business, right? So
very much.
They know your operations, they know where you're buying products from, they know how you're sending them, air freight, sea freight, how often you're sending them, where you need to get them delivered to, so that, as you say, in the event of any issues, the cover's already in place and it can go through quite smoothly. So I've heard you guys at Coverfreight, you're working hard to streamline the whole marine insurance cover process. Tell me a bit of what you're doing, how that works to streamline from making new marine insurance covers to claiming on that online.
We'll work very hard to put a bit of tech behind this 100-year-old cargo insurance, and the tech is simply scrapes a lot of the information we need in order to produce a quote. It minimises any sort of call it errors in double handling, typing errors, or whatever it may be. The tech itself sits within freight forwarders' invoicing systems, or their systems which they use to organise freight from A to B. And what it does is it'll scrape the right information out to produce a quote for the freight forwarder then to distribute out to the client itself. The insurance industry back in 2004 went through a reform. They called it the FSRA, and which basically excluded a lot of people on selling insurance. So this tech we've developed abides by all the laws out there. So it was very difficult around all of those sort of situations to again allow that freight forwarder to offer cargo insurance to his client, even though he's not a registered insurance broker.
I'm sure that would clean up the industry a lot.
Yeah. And I guess where we sit at Coverfreight, we just want to not only clean up the industry, but also I would say shave the price in half. Because again, like I was saying, a lot of it's around the administration with cargo insurance, and now we're pretty much at zero administration.
Yeah, sounds great. So what are some key tips that we can give listeners when it comes to finding a good marine insurance broker, and what to look out for, and what sort of tips can you give them to make that process easy?
I must say it's probably a little hard to find a specialist marine insurance broker. Generally, when people leave school, they don't really put their hand up to say, I'm going to enter the insurance industry for one, let alone specialise heavily in probably one of the oldest lines of insurance. So there's not too many of them out there. So you really want to look around for a good specialist on your side. A lot of general insurance brokers, as we call them in our trade, because we're a group of specialists here. General insurance brokers, they're a little bit like your GP. You'll go to them and they'll do everything. They're a bit of a jack of all trades. But unlike the GP, where you go in with a sore knee and he refers you off to the knee doctor, your general insurance broker, if you go in the cargo theory, he'll think, I reckon I can operate on this knee and get a result. So you do have to be a little bit careful out there. I don't want to say anything against my people within my fraternity about good or bad, but certainly I would try and seek some sort of specialist and see what experience they have in marine insurance.
Yeah, I think you're right. The knowledge and specialist knowledge in that product and in that industry, I think, is quite important.
Yeah, very much so, and it's disappearing within our insurance industry as well.
Yeah.
So marine insurance, when you talk about your property and your liability and your management liabilities, all these other products that an insurance broker will sell, marine insurance actually constitutes about 2 to 3% of our whole insurance pool. So it's very small. So it's not focused on too much by your generalist insurance broker. Yep. They'd rather go for the big ticket property accounts and the ones that would have a lot more.
Okay, that's great. Well, thanks so much for being here today, Steve. I think you've given listeners quite a few tips on what to look out for and the different types of cover and how it all works. So, thanks very much for your time.
Thank you, Ben.
Yeah, thanks for listening to the Import-Export podcast. This podcast is brought to you by IncoDocs.com, where importers, exporters and freight companies connect to make global trade easy.